All right, folks, welcome to the Bitcoin Online Summit. My name is Stephen Michaels, and I'm excited to have with us today Mr. Greg Simon, CEO of CryptoWerks. And welcome to the show, Greg.
Thank you, Stephen. It's a pleasure to be here.
Fantastic. Well, I know I had notes here on a big bio about yourself, but I think maybe it's better if we have folks just kind of hear straight from you to tell us a little bit about your background, get to know you, and then we can talk about all these cool things related to Bitcoin. So, can you tell us just a little bit about yourself? So.
Sure, of course. Thank you. Well, I'm originally from Nebraska. I was born and raised there. Went to university at the University of Nebraska, my hometown of Lincoln. I wanted to experience the world outside the United States during my college years. I had studied some Japanese language, and I decided to expand upon that by doing a study abroad in Japan. I went to Nanzan University for 2 years, where I studied Japanese language and Japanese accounting. I enjoyed it quite a bit. I liked being out and seeing different cultures and meeting different people. So when I finished my undergraduate degree, I returned to Japan, where I worked in banking as a risk manager for 3 years, and decided after that to go back to business school to get a MBA. I went to Columbia University in New York City. I missed Japan, and I missed being overseas in Asia and an international environment. So I went back to Tokyo, where I re-entered into banking, working as an equity salesperson for 12 years, where I did Japanese and Asian equity sales. And quite enjoyed that career a lot. Did that for more than a decade. Had a chance to travel all around the world, meet lots of interesting people. It was very challenging. But the last few years of that career, I started to feel some reservations about the financial system, the way it's currently structured. So obviously, we all know what those problems are. It's structured in such a way it doesn't seem to really be fair for the majority of people. Right. And I decided I wanted to be a part of creating solutions for the problems that became quite apparent in the 2008 financial crisis. I wasn't exactly sure how I was going to do that yet. I wasn't involved in Bitcoin at the time. I had taken a look at it from a currency and an economics perspective, but it didn't really, honestly, it didn't really look that interesting to me at the time. And I think a lot of people looking at it from a currency perspective, from an economics perspective, from a finance perspective, may come to that same conclusion. And I think it's actually the logical conclusion, at least it was a few years ago. When I left that job, I decided to travel with my girlfriend. We traveled around the world in 2013. We bought 2 around the world tickets. We went to 40 different countries together, trying to find inspiration and meet people and have new experiences. And it was probably the best year of my life, the most rewarding, personally. It gave me time to go deep into the Bitcoin technology, to look at it under the hood, I like to say, get my hands dirty. And it became very clear to me early on that this is the transformational potential of this technology is like nothing that we've experienced in our lifetimes. I even think it's the disruption in a positive way we'll experience from this is greater than what the internet has produced to us. And it's something that we can use voluntarily in parallel to existing infrastructure. And so through my study of the technology last year and meeting people in the Bitcoin community, it became obvious to me that I wanted to devote my time solely to the promotion of this technology, to both the currency aspects such as Bitcoin, which I'm a huge fan of, and also helping it to transcend into other areas of the economy, which would be non-monetary applications of the underlying technology. And that's the basis of my company, CryptoWerks.
Fantastic. So yeah, I was doing a little bit of web research, and I think I stumbled on a short promo video, I believe was from CryptoWerks on YouTube, and had some little snippets from some presentations that I think you were involved in. And it sounds very fascinating, the non-monetary uses of Bitcoin, because I think a lot of people out there, money is the first thing we think about, but, I love the analogy. A lot of folks have mentioned that, the Bitcoin protocol is the platform, and the first app on top of that is money, but there's so many other things we can do with it. And so kind of tell me a little bit about CryptoWerks and what are those other areas that you guys are focusing on and that you're looking into that you feel have a lot of potential?
Sure, of course. So when we're talking about the technology behind Bitcoin, a lot of us think that this is a peer-to-peer currency, but it's actually, if we step back, it's something much more exciting than that. It's basically a ledger of data. So if you think about a balance sheet that has columns and rows, or maybe an Excel sheet is a better analogy. An Excel sheet, you have columns and rows, and the columns will be names of people, accounts, balances, whatever. And then the different rows will be individual names. That's basically what this technology is. When we use it as Bitcoin, we have a wallet addresses as one column, and we have as the next column the balance in your wallet. And that ledger, that Excel sheet, exists in duplicate across every node in the network, what we call miners when we're referring to Bitcoin. And because all of those are equal in importance, that's referred to as the neutrality of the network, we can trust that the data is correct. So our trust is in the neutral network of ledgers that exists within every miner. So when we use Bitcoin, we know that our money is not being counterfeited, and the money in our wallet actually does exist in multiple places where one person can't maliciously change it. And that's fantastic, and this is extremely transformative, and it's the reason why I became excited in this technology. But it gets even more exciting when we realize that we can take that data in that Excel sheet, and instead of just putting currency information in there, we can put anything in there, any kind of information that we want to have greater trust in the integrity of that data being correct. We can put that in there, and we can use that data with higher confidence. So there's no limitation to what we can do. That's the beauty of this this ledger or this Excel sheet. We can put any information in there we want to gain greater trust in the integrity of that information. But what we're focusing on in CryptoWerks, because we don't want to try and boil the ocean, is the 2 or 3 different applications where we see the most disruptive potential of applying this ledger to non-monetary applications. And so those that we're focusing on are the use of property, specifically deeds for real estate. Okay. The second would be for election data, and the third would be for accounting information. So taking balance sheets, financial statements, things like that, and distributing that across a ledger such as Bitcoin.
Fantastic. So yeah, those are definitely industries that are ripe for disruption, that have been doing things a certain way for way too long. And you know, my background, I was a real estate investor broker for probably a little over 10 years, and that's one of the things that really jumped out to me too. And I saw the blockchain. It reminded me of the old, you know, in real estate, you have what's called the chain of title, right? You have a owner A sells to owner B, sells to owner C, and it's all recorded with a deed, recorded in the you know, the county courthouse where the property is located in. And there's all kinds of potential for abuse, because you could have fraudulent deeds, you know, fraudulent notaries. I mean, it's real easy to become a notary, and people can exploit that. And so the idea with real estate, you know, that's just a natural progression. And so let's talk about real estate first. How do you see this working in a real estate situation, or how do you know, go from, you know, where we are today to where maybe we can have all real estate transactions recorded on a public ledger, or maybe you just target a specific community first? I mean, what are your thoughts on that? So
sure. It's the product that we're most excited about. It's the product where we expect to see the greatest traction initially when we get this product out to market. And I would add that this product is extremely important to protecting the integrity of democracy. And it doesn't seem intuitive to people at first. We think elections are more important. Obviously, we want to have fair and transparent elections, which is another reason why that's the second product that we plan to focus on down the road. But actually, I've had discussions with U.S. senators and governors about the election ledger, and they've actually told me that the protection of a functional and healthy democracy, the protection of private property, is more important than the right to vote. So if you don't have the right to protect your property, then it doesn't matter who you can vote for if your property can be seized from you. Absolutely. So this product of using the blockchain for protecting property, not only is it giving us greater transparency, but it's actually defending our democracies in a very important way. I'm not sure if you heard of the book by Hernando de Soto, The Mystery of Capital. Yes. But in his book, he actually did extensive research into the amount of undeeded property there is around the world. So by undeeded property, I mean property where somebody may have a farm or a house on a piece of land, but they don't have a deed that gives them legal ownership of that piece of land for whatever reason. Now that person, even though it could have been in their family possession for generations, that land could possibly be taken away from them. There's not much they can do about it. So Hernando de Soto estimates that this amount of undeeded property around the world is $10 trillion. Right? So it was with a T, wow. 10 trillion.
Wow.
Right? It's huge. And so a lot of us got into Bitcoin because of the potential to bank the unbanked. And this is actually why I got into Bitcoin. I actually ended up becoming a founding member of the Nicaragua Bitcoin Foundation because they have a very high unbanked population. 85% of their population is unbanked. This is another side of the exact same coin. So if a person is passionate about using the ledger, the crypto ledger, to bank the unbanked when currency is in the ledger, we're doing the exact same thing. But we're putting deed information into the ledger. We're deeding the undeeded. So all the people around the world who have no protection of their property because it's undeeded land, what we will do is we will deed all those people around the world. And again, I want to say it's $10 trillion worth of real estate that is at risk.
Wow.
Right?
Wow.
So it's a huge market. And so we're very excited about the opportunity to be leading this protection for the individual and basically empowering the individual around the world in terms of giving them some sort of recourse to their property. Now that said, we obviously can't tackle the entire $10 trillion immediately. Right. There's shades of gray. There are some places will be easier initially, some places will be more difficult. We're planning to launch initially in the United States because I like to say it sort of wins the ugly parade in terms of legal clarity. And so we'll be starting in one county in the United States as a beta test for the deed coin, what we call it, but the property blockchain. And once we have one county blockchain up and running, then we will be expanding that out on a county-by-county basis in the United States.
Wow, fantastic. So, a couple of things you hit on there that we can dig into if you don't mind.
Sure.
So, you're targeting a county. You're talking about the concept of a deed coin. Let's first talk about the specific county. How do you obviously you can't give away your trade secrets as well, but I suppose there's got to be some way to deal with the local legal system, right, that recognizes traditional property titles, and so I guess part of your job is going to be some kind of sales approach to regulators or whatnot to recognize your deed ledger, right? Or is it going to be kind of more of a homesteading type claim, and you publish it on a blockchain and then try and build recognition of that blockchain as time goes on, or how? I don't know. Elaborate on that if you can. So.
Yeah, that's a great question. Now we're actually working closely with people in the title industry. Okay. So they've actually approached us initially with this idea. Because it is a risk for them. They have to pay insurance against unknown liens against property. So by them voluntarily using alongside what the current tools are, a deed coin blockchain to give greater transparency and confidence into the ownership of that property, so there's no question whose it is, then for the title companies, their insurance costs actually go down, and they have greater profitability. So the industry wants this, and we're providing it for them. We're working with people in the industry. We're starting in one specific county, and I won't say who it is, but we're starting in one county because, like you said, it does have to be tailored somewhat to the legal jurisdiction.
Right.
So we've split up the United States into counties, 307 counties in the U.S., so we will be producing a blockchain per county. That's one reason why we're doing one blockchain per county. The other reason is simply because of blockchain bloat. So we have to put the entire PDF of the deed into the blockchain. It can't be just a hash pointing towards the deed outside of the blockchain. And because of that, we have to have multiple blockchains in order to facilitate the amount of information that will be kept inside of that blockchain. So for those two reasons, we have to have one per county. And as I said, we're working closely with people in the title industry. I've never worked in the title industry, so we're very fortunate that they're assisting us, and they will be the ones that will help us to actually approach the industry and to help them educate the benefits that they will receive from doing this, and then we can move forward from there.
So it sounds like they would probably, and correct me if I'm wrong, but it sounds like they would probably incorporate this blockchain, this county deeded blockchain, kind of in parallel with the existing county recording system, right? Until it gains trust and recognition. But also it's almost like a second factor of authentication, if you want to use those terms, for the title company, so that, like you say, it mentioned, it reduces their insurance costs. Does that make sense? Am I on the right track there with that?
Absolutely. What you've said actually explains all of our three initial products. Okay. Once you start to try and change government, you may actually make things worse.
Right.
So, I'm a big Austrian economics fan. I've been a fan of a gold standard for many years until I discovered Bitcoin. But one of the problems with the gold standard is it requires a change in the law. And that's very difficult, if not impossible, to do, especially if you're displacing somebody who currently has a lot of power and they have to give up that power. Right. Bitcoin is beautiful as a currency application of this ledger because I use it voluntarily. Other people can use it voluntarily. We don't have to audit the Fed. We don't have to end the Fed. We don't have to pass any laws. We can just use it voluntarily alongside the legacy infrastructure, which in that case would be the central bank system. So all of our products are exactly the same way. We don't have to change any legislation. We don't have to displace the current legacy infrastructure. We can use it in parallel. So with the deed blockchain, whatever is required currently in any county or country around the world, that can continue as it is. And I like to use the analogy of, say, when the internet started, so you had bookstores. And we used to all go in the bookstore and buy books. And then when Amazon came along, we could also buy books on the internet. But that didn't mean people suddenly stopped buying books on the internet. Initially, even myself, I thought I would never buy books on the internet. So I kept going into bookstores. But over time, with both of them running parallel, at each individual's own pace, it becomes apparent to them the utility of using the new technology, and eventually you have that full transition. We expect the same thing will happen over time. When we launch all three of our core products with the deed blockchain, the election blockchains, and the accounting blockchains, they will be launched in parallel to what the existing options are. And the early adopters will be the ones who will use it first, and they will gain the advantage as guys like Overstock or Tiger Direct or Dish are now. And then the late adopters in will come after them. So we don't have to change anything. It's actually going to be quite easy for us to do.
Wow, that's great. Yeah, I like that idea, just running parallel, and so you can build confidence and show people a better way where they can just voluntarily migrate over. So with this public blockchain, so you mentioned they're separate blockchains, right, for each county, so talking about property specifically. And so are these blockchains, which are really just decentralized ledgers, will these property blockchains or county blockchains, will they be distributed, or how would they be distributed, and how would they, like in Bitcoin we have proof of work algorithm that helps and validates and double checks and everything. How would that work in property blockchain?
Right. Very good question. So there are still miners. There are miners are doing some sort of proof of something. Most likely, it's going to be proof of work in almost every case. Okay. But it deviates slightly from the Bitcoin model. And so we've had to sort of create new terms for these concepts that we're generating here. In order to get beyond the currency applications, we have to solve some new challenges that arise. So when we're talking about the currency application of the ledger, such as Bitcoin, it's individual consumers that are using it to purchase things or save it or whatever. And when you're doing that, it's not your proprietary data. It's data that represents value that we use as a currency. But when we're crossing over into the commercial applications, when we're talking about titles, or we're talking about accounting data, or we're talking about election data, then we can't allow the open mining model because there's unquantifiable risks there.
Right.
And two that everybody's probably familiar with would be a 51% attack against a network,
Mhm.
or a Sybil attack against a network.
Right.
Now, we can debate the likelihood of either of those occurring, if they're high or low, but we probably would all agree that it's a non-zero probability that those could occur.
Right.
So when we're talking about a business, a corporation that is depending upon something for their ongoing business, they have to be able to quantify those risks. And as a former risk manager, if I were approached with something like Deed blockchain, and they said, please use this because it gives you greater transparency and trust that who owns a property, who you say owns a property actually owns it. And then I would go back to that person and say, okay, but what about this 51% attack risk? And they said, oh, don't worry, that won't happen. And if I can't quantify it, I would tell my company, we cannot do this.
Right.
Right? So it's a problem that doesn't exist with currency. So for us to pioneer that evolution, what we have to do is create something what we call a secure trust pool. This is slightly controversial with some people, and I love discussing it because I actually think that this is the model that will be the future of cryptocurrency. What we do with the secure trust pool is we have the miners in our pool, but with Bitcoin, anybody can mine. You can download the software, you can start to run it, and it works out fine. But we can't do that for the reasons I just stated. So our miners, we have to know who they are. So they go through an application process that allows us to confirm they are a human being, and they are the human being that they claim they are. And then once they are inside, then the mining capacity that they are in control of, they are in complete control of that. So we can't control anything that they do. They can point to whatever blockchain they want, the Bitcoin or Litecoin, depending on the hashing algorithm, or any of our blockchains, right? And so that gives people peace of mind that we are not in control. However, we are monitoring the activity. And so, for example, with Bitcoin, recently ghash.io got to 50% of the hashing network. Some people say that every time that happens, they will back down. But every time they get to that point, it gets people worried. It especially causes corporations to worry if they're depending upon that information in the ledger. I actually think that because of the economic incentives of the way Bitcoin is currently coded, that ghash.io will eventually, here's a prediction, I'll have to look back and stretch it out, but I think they will exceed 51%. And the Bitcoin community will rationalize that in some way and say they will not do something malicious, therefore we can trust this centralization. And so that's actually, because we think that will occur anyways, what we're saying is in our model, it's superior to that likely outcome, because even though we cannot control them, if something were to appear to occur, say some miner looks like they will get to 30 or 40% or 50% of one of the blockchains, we actually will have some laid out transparent process that will allow us to go in there and say, okay, this is the limit of what you can do on this blockchain, and give them fair warning multiple times. If they exceed a place where that corporation or the owner or the borrower of that blockchain is uncomfortable with, then we would have the ability to go in and say, this is the limitation of what you can do. I would probably guess there's a lot of Bitcoiners right now wish there was a way to do that with Bitcoin. Wish there was some person with the ability to say, ghash.io, sorry, you can't exceed 40%. I don't think that would be very controversial if that option was available to the core devs right now. So all we're doing is providing a solution to a problem that actually already exists.
Right, right, interesting. So, so you called it a secure trust? Is that what you called it?
We call it a secure trust pool. That's right.
Secure trust pool. Okay, great. Okay.
Secure trust pool. That's right.
Okay.
So we see the miners as the lenders of trust. They're by securing the ledger, and because every miner is equal in importance, that's the neutrality of the mining network. Then every ledger they're commoditized. It's a commodity that gives us trust. So we consider that the lenders of trust, and we call that a secure trust pool, as opposed to an unsecured trust pool, which would be the model that Bitcoin currently is.
Sure. So now in this secure trust pool, they're doing mining. So I imagine they're earning rewards for their mining. So this would be the Deed coin, then. Is that right?
Right. So think of the blockchains as the borrowers of that trust, right? And we call this ecosystem our trust market, bringing together the lenders of trust, which are the miners, and the borrowers of trust, who are the users of the blockchains. And so the users of the blockchains, then they pay a fee for the access to that trust by the customized blockchain that has been made for them. So some county's blockchain that is used for them to customize access to that trust in the form of a deed blockchain. Now they pay a fee for access to that, for the construction and maintenance, and that fee is passed along to the miners, and that is the incentive for the miners to point to that blockchain.
Okay. Okay. So an example would be like in a traditional county recorder situation where deeds are recorded. There's filing fees. There's I guess that's the main fee. You file a document and you pay a fee to get that filed. So in this case, with the deed blockchain, they would have to own some deed coins to be able to pay to enter something in the ledger. Does that sound about right? Or?
Well, not necessarily. So again, it's actually quite difficult for us to get beyond the currency thinking.
Sure, yeah.
Don't worry. I mean, everybody, our only experience with the blockchain so far is as a currency. So it takes a little while to understand how this works without currency. There's no coins involved with these blockchains. There are transactions, and within that transaction, data is hashed, and that data is the deed. Now, the miners with Bitcoin, they're compensated by minting new Bitcoin. I believe it's currently 25 Bitcoin per block. That's how we incentivize those miners to protect the data in the ledger. Now, when we get to non-monetary blockchains, we can't mint coins because there are no coins to mint. So we have to incentivize those miners to protect the data in the ledger in some other way. And that other way is whoever is the borrower of trust with that blockchain, they are paying a fee, which we collect, and then we pass that along to the miners. And how many miners they want to mine their blockchain, they have to determine, and they will pay according to whatever incentive they want, right? So if they want more miners on their blockchain, they will pay more. So more money then is passed along to miners, incentivizing them to point towards mining their particular blockchain within our trust market, as opposed to other blockchains that will be in our trust market.
Okay, so then to compensate these miners, what is the method of compensation? How would that work? So.
Right. Well, it really can be anything. As long as we are transferring to them some unit of value that they have confidence that they can use as an economic good, it doesn't really matter.
Right.
Most likely it will be dominated by Bitcoin or probably US dollars.
Sure.
And it probably will be majority US dollars because we are approaching areas of the economy beyond currency and beyond all the Bitcoin friends that we have. We're talking about corporations who really have no interest whatsoever in Bitcoin, but they do have interest in transparency and trust in other ledgers of data. So most likely the currency we'll be using is dollars or euros or yen or whatever the currency is. The sovereign fiat is probably in that jurisdiction that we're working in.
Right, something they already know and understand and have an appreciation for. And then who knows, maybe someday in the future, if Bitcoin gains enough predominance, then they'll start requesting payment in Bitcoin, right? So.
Right. Absolutely, and they will definitely have the option because we're big fans of Bitcoin at CryptoWerks.
Sure, perfect. Right. So, okay, cool. So yeah, fascinating. And so I'm trying to wrap my mind around it, and I think it's coming together. And it sounds like you know, the same thing, like you mentioned, it applies both to election data and applies to you know, public balance sheets or balance sheets of corporations. So share a little bit on the balance sheet idea. What's your use cases there and benefits? You know, obviously benefits are transparency, but maybe you can give some examples or use cases on how that would work.
Sure, exactly. We call this open ledger accounting. I think Trace Mayer was probably the first person to discuss the potential to apply the ledger to accounting, and he refers to it as triple entry bookkeeping.
Right.
But it's the same thing that we're talking about. So think of a balance sheet with a corporation. You have a debit column and a credit column next to it. And imagine adding a third column to that balance sheet, which effectively is your blockchain. Now that blockchain allows us to do a lot of things. One, it gives us more confidence in the data because the data is stored across the network of miners, but it also allows us to do other things. We can real-time link up the accounts of that corporation with any of the other corporations that it's touching financially. So if it does a transaction with another corporation, let's say you're a company, I'm a company, and I sell to you some widget, and I receive an accounts receivable from you, then a blockchain will allow us to real-time link your account to my account without giving away the proprietary information, but to prove the accuracy of our accounts. So I can't inflate my account receivables to make it look like I'm making more sales than I'm making that I haven't realized, because it's connected through to what you've done with your sales. And on the opposite side of that same coin, you can't inflate your sales because, or whatever you received, because it has to link to my account. So right now we have to trust auditors or human beings to do that for us, and that has worked until now. It hasn't been perfect. We all know there are cases where auditors miss things either by mistake or purposely, and this gives us another added tool to have confidence in the integrity of that data in the financial statements. In addition to that, because of the blockchain is structured in a way of blocks over certain periods of time, with Bitcoin, it's 10 minutes. With open ledger accounting, because we're constructing it custom, we can make it anything we want. So let's say it's a one day. Let's say we have 1 day blocks in Corporation X's blockchain. As an analyst, this is extremely powerful to you, because when you're analyzing a corporation now, you can only go look at quarterly information. So they give us the data on a quarterly basis, and we go through all the numbers, and we try and figure out the valuation of this company and the health of their financial statements. But with the blockchain of the open ledger accounting, we can actually go in and analyze that by block. So think of it as taking a photograph of every account, of the financial status of that corporation every day or every hour, whatever you want it to be. And then we can rigorously analyze all of those accounts on a much greater detail across any period of time. Right? So all of this transparency for a corporation is a huge competitive advantage to them, because one, they're paying less to create the integrity of the data. So although they still will require internal auditors and external auditors, it will require less of those, so the cost has gone down. It also gives their creditors higher confidence that their numbers are correct, and so their borrowing costs will go down. So we have a twofold benefit for any corporation who incorporates open ledger accounting, in that their operating costs have declined and their borrowing costs have declined. Their profits have gone up, their stock price has probably gone up, and they have a competitive advantage over everyone else who has not taken the same tool as open ledger accounting.
So so on this open ledger for these businesses, then the ledger records transactions. So are these transactions conducted in cryptocurrencies? Are they conducted in just a validation of a current ledger that they're already operating, or how does that how are those transactions recorded? I guess that's
Sure.
that's the question.
Well, it could be in whatever unit of account that the corporation chooses to use. So it would be whatever their current financial statements are done in. So it's just another way to record the same information in a more high technology way. So if the financial statements are currently done in dollars, then the unit of account for the blockchain on the third column would also be in dollars. You could convert it to any unit of account you want. It could be Japanese yen, it could be euros, it could be Bitcoin. It's actually not really a problem. Whatever you decide for it to be, and we have confidence that is a unit of account. It's really up to the corporation, and it would be very flexible.
Yeah, whatever they're operating in. So
Exactly, yeah.
So in essence, then, are they just publishing their data on a daily basis versus a quarterly basis, and they're choosing to publish it to the blockchain? Is that how that works then? Is that
right? Because of the pseudonymity of the blockchain, they're able to make available data without having to give up the specifics of that data. So we can verify that the accounts are correct without actually having to see the actual data in the account.
right? So but now you still have to trust that they input it, that it's accurate at the moment of inputting, or is that not the case? Or what are the incentives for not doing that, I guess?
Right. Well, there obviously is some need to trust at the genesis block of the blockchain. But
Right.
once the genesis block is initiated, then we can go and we can track that the data flows from block to block correctly. So
Okay.
yes, there is. If we can trace it to the other side of the transaction, which would be the company that's buying or selling, if it's an external transaction, then yes, there is. Well, if it's connected, then we don't have to trust them as long as the counterparty is using the same tools. And we understand that will take time for each corporation to have its own blockchain, but we think
Right.
will spread quickly as e-commerce spread very quickly because the advantages of doing it become apparent, which is
Yeah.
again is greater efficiency, higher profits. But when you're talking about a person who is doing a transaction with an outside vendor who doesn't have that blockchain, then yes, we still have to trust that that person is putting in that information properly. So it doesn't solve all of the problems now,
Sure.
but it does get us a little bit closer towards having more confidence in that data.
Right, and that makes sense. You can't have a perfect world on day one, but it's you start building that ecosystem, and as you get more participants, then you have a higher trust model. It sounds like so.
Yeah, it also
Uh,
works across a supply chain quite well, and we think that this will be
okay.
one of the areas that's very popular immediately. If you're Toyota and you have this
Yeah.
huge network of suppliers across the world, uh, having a Toyota blockchain and having each of your suppliers having a supplier blockchain, it makes it very efficient to share that information or transfer value as a payment for those goods. You could even create a Toyota coin that is pegged to some currency that's only traded internally in that supply chain. So you can send it back and forth across suppliers or Toyota at no cost, directly peer-to-peer, without using any banks, because it's a Toyota coin, even though they
Right.
peg it to some value that the suppliers want it to be. Additionally, that blockchain can serve a second purpose by verifying the accounts match up.
Interesting. Okay. Well, I could see how in this example of a Toyota coin, that coin could potentially they could issue their own currency that they can trade with in the open marketplace with other businesses, and those can be redeemed back in for Toyota inventory, right? Products and services that they produce. Um,
Absolutely. Yeah, we actually
so,
see a future where corporations will have their own currencies. We're actually talking with corporations now
right.
who were designing coins specifically like that. Coins that are corporate coins that are used for commerce with that corporation, but because it's a blockchain, it also can be used as currency external to that corporation.
Right. So in that particular use case, it's almost like a digitized gift certificate or credit certificate, redeemable by the corporation's goods and services. And there's another interesting project. I don't know if you guys have explored it, but it's called Coin Prism, and it was one of our presenters on the summit. You can go back and hear their video, but what they did is they created this colored coin mechanism that uses the Bitcoin blockchain, but it colors the coins, and the best use case I could see for those is a corporate token as a internal currency redeemable for their own goods and services. But so I only bring that up in case you heard of it, if you have any questions, or maybe it's something you want to look into. But um, I don't know if you have any comments on that or not, but I just
Well,
mentioned that.
yeah,
So.
actually, I'm familiar with colored coins. I think it's a fantastic innovation. It's an efficient way to allow people to create tokens of value that may not necessarily be Bitcoin. You could assign anything to it. It could be gold, silver, whatever you like. And I think that definitely there's a market for that, and it solves a need in the market for a number of people. We think it's great. We're actually capable of offering colored coins as a solution if that's the best solution for customized access to the trust and the trust market. But we believe that when you're talking about, again, corporate entities, if they're going to be depending upon this digital asset for their ongoing commerce, and they cannot quantify the risks associated with Bitcoin, which would
Okay.
be not knowing who is going to have access to mining their information. So they don't know, maybe half of the network is in some country that they can't have confidence in the stability of that country or who it is. Maybe it's malicious miners. With Bitcoin, we don't know who that is. And the risk of a 51% attack or something happening to that blockchain that will put in question the integrity of their digital asset Some small companies, sure, maybe they'll be happy with that. Some individuals, of course, because we're not an ongoing corporation. But when you're talking about a serious player in commerce, that's not sufficient for them because they can't quantify that risk. They have to have their own blockchain where they know that there's confidence those miners are not malicious miners, and they're confident in the ability of the blockchain to continue.
Yeah, it's very interesting. It's like, basically you're offering, and correct me if I'm way off base here, but it sounds a lot like the software as a service model, but in this case, it's blockchain as a service model. You're creating blockchains for corporate businesses that that can use it internally and help, and then with their trade partners if they want to. Does that make sense?
It's one part of what we do. We're actually the market that brings together the lenders and the borrowers of the trust. But for the borrowers of trust to have access to that trust, they have to have an interface to customize it, and that interface in most cases will be a blockchain. It could be a colored coin, it could be a metacoin, it could be Ethereum. All of these are different interfaces for us to access that pool of trust. And so we think the majority of them are blockchains, but that's not really what we do. That's just to give them access to the pool of trust. And it's actually quite scalable. Once we have one blockchain developed for property, the majority of the parameters will be the same across every case. So we actually envision a time where we could just do click, 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 and we can clone that quite easily and customize it easily.
Fantastic. So coming back to the, I want to kind of circle back to real estate again because I realized I had some unanswered questions there that I wanted to ask you about that. And one of them is, so the customers would most likely be title companies would be the primary customer. Is that correct? Or
it can be title companies. It can be individuals that want to know. Maybe they have a piece of land that's undeeded, and they want to hash their claim to own that land into something they know will exist, so it's distributed worldwide outside of their country. It may not be 100% guaranteed to be recognized legally by the government in their country, but it's something more than nothing.
Right, so it gives them a way to declare their ownership, basically, right? It's a public notice, or almost like a public declaration, like a homestead notice, right? Where they say
something like that, yeah. So let's say I have a piece of farmland, and you come up and say, hey, this is my land. If I had hashed my claim to own that in a blockchain before you came, I could go to the government and say, actually, if you go back to property blockchain at this date and time, you can see I've said, I'm living here, this is mine.
Right.
And I want to reiterate again, this is a big problem for humanity. There's $10 trillion of undeeded land around the world for whatever reason. And those people, they have the risk of losing that land. And so what we're providing is a tool that governments are not allowed to provide for the individual. The cost for the individual won't be cost prohibitive. You can put together a piece of paper, hash it into that blockchain, and you have some way to claim this is actually my land. We're deeding the undeed. It's the same thing as banking the unbanked. It's a very exciting way to use this technology to empower individuals around the world.
Very interesting. Yeah, they're staking their claim. They're doing it publicly. It's kind of like filing a trademark that lets the world know. It's a public announcement that, hey, I have claim to this property, and if you have any dispute, then settle it now or forever hold your peace, kind of situation, right?
Correct. So, and those miners will be dispersed around the world. The blockchain, the ledger will be in their possession, in a box in their house. And so the individual on the land has the confidence to know that this is protected by a worldwide network of miners.
Right, and I can see how over time people begin to gain trust in that ledger, and so that undeeded property now has a claim publicly made, and then as long that would be the time for someone to challenge it if they disputed that claim, because the longer they wait, the less likely they are to be able to stake that claim. So I imagine it would probably make sense to and I don't know if the mechanism exists or not, but sometimes you can file a public notice in the traditional legacy system in property, depending on the county, I guess. But it wouldn't be a bad idea to publicly announce your, even though it would have no legal effect in that jurisdiction, to announce that, hey, I'm staking a claim here. and I'm also recording it over here on this blockchain. And now you start building a basis, and as time goes on and people don't dispute it, then it becomes valuable. Is that a correct visualization of how it could work? Or?
Right, that's exactly how we see it playing out. This is a superior tool to protecting property rights. It is new technology, and it takes people time to feel comfortable with using technology. And so it'll be existing in parallel to, I love your use of the word legacy. I use legacy as well. That just goes to show that in your mind you've already accepted that this is the new paradigm.
Absolutely.
I use legacy economy, legacy currency, legacy infrastructure. It's outdated, and its days are over, basically. The transition is into these distributed ledgers. But yeah, we see that eventually the people will come around and see the value. And we actually foresee a time when something like the IMF will approach us when they're going into restructure some country financially. It's in their best interest to protect the rights of property owners. We actually foresee a time when they will come to us and say, can we incorporate this property blockchain into our restructuring package for country X so we can guarantee the government cannot come and seize the property of the individuals.
Right. Interesting. Very interesting. So, so let's talk about the PDFs that you would embed in the blockchain. So these PDFs aren't. So you don't even hash them. You don't do any of that. You just actually record the actual PDF document. Is that right? Or
yeah.
How's that
right.
done?
So I think the way some of the metacoins work is they're not putting the entire document into the blockchain because it requires basically more space than is available in that payload. And I'd also add that we have no control over what that payload is. I believe it was recently halved how much data can be recorded per transaction. That's another uncertainty risk for people who are using that payload to record digital assets. What if it disappears, or what if it's cut in half again and it's not enough to store the information? That's an unquantifiable risk. So in order to guarantee that all the information is in the blockchain, the entire PDF actually has to be encrypted. It can't just be a hash pointing towards a document somewhere outside of the blockchain.
Okay.
And that causes a tremendous amount of data. That's not being done now because it cannot be done on Bitcoin. And so if you're hashing something pointing towards that document, and the document changes by just a tiny bit, then the hash does not match up with the document existing outside of the blockchain. So every time you make a change to that document, maybe one letter or a date or something, it has to be rehashed with the blockchain. And that's a tremendous amount of labor, in addition to not being able to store the whole thing in the blockchain. So we solved that by encrypting the entire document within the blockchain. It requires more space, which means it requires more blockchains.
Right, and so it's still encrypted though. So it's just a matter of decrypting that file so people can view the file. And the fact that it is encrypted, it's still less data than the actual unencrypted version of the file, right? I mean,
Well, the data on the deed would be accessible as, say, our Bitcoin wallet balance is accessible. So okay. I could go to blockchain.info, look up your Bitcoin wallet. I can see how much you have in there, right? So that's kind of the same way it would be. We could go into the blockchain. We could go to an account and we can see the actual information that is in that blockchain. But it has been recorded at that point in time. Okay.
And so when you say you can see that information, you can actually read the PDF document in its unencrypted form. Is that right?
It depends upon each use case. In some cases, yes. If it's ideal to have it unencrypted or to have all the data actually visible in the blockchain, then that's the way it will be structured. If in some cases, if it's required to have privacy of some information on there, then some of it will not necessarily be visible. It really would be a case-by-case cases. But the important point there is the flexibility to do either of those. Whatever is required in each specific case, you're capable to do because you're actually building the blockchain customized for that specific use.
Perfect. That makes perfect sense. And I think that's the exciting part about the use of technology, because any information can be digitized, and when it can be digitized, it can be manipulated in so many different custom ways, and that's fascinating. What the ideas you have for this. So I'm excited to see how that works out. And we haven't. My least favorite subject is politics, but we haven't talked about how that would work. And I purposely saved it to the end, hoping we'd run out of time, but we haven't. So tell us how we can make a better world with election blockchains.
Right. Yeah, the election blockchains, it's very exciting. Obviously, everybody, regardless of your political beliefs, if you're on the left or the right or the middle, unless you're a dictator, everybody wants transparent and fair elections. It's indisputable. So the excitement of applying election data to the blockchain is we get beyond this sort of perception, which I think is incorrect, that Bitcoin is just a libertarian movement. It's for anarchists and libertarians, which I very strongly believe is not the case, but it has that perception because some people see it as a threat to the Federal Reserve. But when we're putting election data in there, we can all agree we want the winner to win the election. We want fairness and transparency in our election process. It's critical to our confidence in democracy. And so the excitement of using this for election data is there's no opposition from people who love fraudulent elections, aside from the dictator who's doing the fraudulent election, but that's maybe one or two people. The rest of us are in greater numbers. So we've had a lot of existing politicians come to us who are excited about using this technology for creating the perception of fair elections and more transparent elections. Obviously, when we're talking about election data, we have special challenges. One of those challenges is in this case, you have specific legal constrictions with what you can do with that data. For example, in the United States, you can't have election data publicly available until the polls have actually closed. And so this gives you an additional challenge of who can mine, because if I vote and that is broadcast across the network and hashed into a block, then the general public cannot have access to that until after the election. So we have to have semi-trusted miners in that sort of scenario.
Okay, interesting.
But these are public elections. So obviously we don't have to start with the presidential election. There are elections in counties and cities and states all the time. And so we can start on a more grassroots level, which is where we expect to see the greatest level of demand, maybe something on a city basis or a county basis, where they want to pioneer this thought of transparent elections. And then from there, as any other case would be, when they see the benefits of the transparency and the inability for somebody to fraudulently alter the data, then it will spread slowly across other jurisdictions. And we think eventually worldwide elections will all be handled with some sort of transparent crypto ledger.
Right, and it sounds like that just makes the whole thing much more efficient. And there's still, and correct me if I'm wrong, I mean, there's still potential for abuse as far as someone getting multiple votes or something like that. You're still going to have to at some point tie someone's identity and eligibility to vote to a key or a token for that as their mechanism for voting. So I know that's potentially a problem, but it's a problem we have already anyway. And but once you overcome that, we would have just greater efficiency all across the board, and it'd probably be easier to detect those fraudulent abuses. Am I right, or have you thought about those challenges?
Of course, we've thought a lot about it. We have very smart people, much smarter than I am, working on solutions to these problems every day. And I would want to say that elections is probably the vote blockchain is probably the third product we would have to market, partly because there are specific challenges to doing this. I want to say it's not easy. But it's important. It's important to all of us. So because it's important, CryptoWerks is trying to tackle these problems now. Right. But we can solve some of the existing problems using the blockchain. And I would say we're not trying to displace the current voting system. I think if we tried to do that, we might make it worse. So we're talking with both political parties in the United States already, and we'll leave the legislation as it is. And we're creating a voluntary alternative that can operate within current legislation, so people can vote the way they currently do. Nothing has to change, but they will have another option available for them to vote using the vote blockchain. So you mentioned preventing people from voting twice. Right now, it's actually quite difficult to do, but the vote blockchain actually solves that problem, because what we can do is use multiple biometric identifiers. So, for example, we take your fingerprint. You can measure the veins in a person's eyeball to verify their identity as well, or you can actually take a heartbeat signature. So there's multiple things we can take to verify that person is who they are. and they haven't already voted. And then from that verification, then we can allow them to vote from any environment. It doesn't have to be a secured environment as long as they have their interface, which can be a smartphone or a laptop. So it solves the problem of people voting twice, but it also solves another very important problem is getting people to vote. Right? So, for example, young people are generally very passionate about voting. I know I was a huge supporter of Ron Paul. I know people younger than me were huge supporters of Ron Paul, but they didn't actually go to polls because you have to get out of bed and you have to go down the polling station, stand in line, and pain in the butt. But if you can vote from your smartphone, we anticipate once that option is available, that young voter turnout ratio will go something close to 100%.
Right.
So it's empowering these individuals. Additionally, when we're talking about the overseas vote, so I lived overseas for most of my adult life. It's not easy to vote when you're overseas. You have to request a paper ballot. You have to fill it out. You have to either mail it back in or go down to the embassy and stand in line. It's even more trouble than if you're voting here at home. If you can vote from a smartphone that can verify your identity using something like a vote blockchain, then we can also get that vote turnout ratio significantly higher than it is now. We have more people voting, and our democracy is representing us better.
Great, great. Yeah, I could just totally see the efficiency mechanism there being greatly enhanced, and of course, being a voluntarist, I would say by not voting, you're voting against the system entirely. but at least it's easier for people to express their vote, whatever it is, and I think that's great. So yeah, very fascinating stuff. I know we're coming up on the end of our hour here, and I really like the approach that yourself and CryptoWerks are taking, because it's a very non-threatening approach to the existing system. It's you don't have to change anything the way it is. You just show a more efficient, better way. And as that system gains trust and appreciation, we'll see the migration over to the better system, and that's exciting. I think improving the efficiency of current systems would be a lot easier to do when you use these technologies. So that's very exciting. So in closing, I guess two things. Number one is, if you could share with us kind of any final thoughts or ideas that you'd like to leave with our audience. I mean, we have people who are Bitcoiners, we have people who are, people who are very interested in politics, we have people who are definitely interested in property rights. But any closing thoughts or ideas that you want to leave with them, and then also if you could share with us maybe the best ways to follow you, if you have a website or a Twitter account, or any way we can keep up to date on your projects and your progress.
Right. Well, I appreciate the opportunity to have a final closing here. And I have something I do want to say. We are very optimistic about the future for these three products that we discussed: the property blockchain, the election blockchain, and the accounting blockchain. We expect to be in a very high growth phase for a number of years, and we want people to work with us. So we want to expand globally, particularly with the deed coin, with the property rights. It's very important to us to deed the undeeded, and you're probably going to hear this phrase a lot going forward, as much as you hear bank the unbanked. I actually believe it's more important for us to deed the undeeded than to bank the unbanked. And so we want people to work with us. We need people that are involved with property around the world. If they're involved with property and they believe that it is a problem in their country of undeeded land, we very much want them to reach out to us, because we want to work in every country around the world with them to bank those, to deed those undeeded, and to give them some protection on their property. It's difficult for us to, although I love traveling, I traveled all of last year, it's hard for us to go to every country on earth and find people in each country who are involved in this industry. If they could come to us, that would be fantastic, because we definitely have opportunities for everyone around the world to get involved with this property blockchain. That's the first answer to your question. The second one I would say is, in terms of following me, right? I used to run a blog, but since working on starting this company, it's consuming all of my time. So unfortunately, there isn't. But if people want to reach out to me, I'm on Twitter at Gregory L. Simon, or they can contact me at greg@cryptoworks.com. And anybody who tries to reach me, I promise I'll get back to them. And the final thing I would say is, I'm very excited about this technology. I've devoted my life towards the promotion of this ledger, both as a currency, Bitcoin. I own a lot of Bitcoin. I use it whenever I can. I promote it to everyone I can, and also the non-monetary applications of this ledger. I would tell people that the most important thing we need to focus on is education. Right? So we can use it ourselves, and that's fantastic. But for us to spread the adoption of this technology, we need to educate other people and be patient, because a lot of times they're not receptive to technology. I wasn't a technician before, but so I understand how intimidating it can be. Focus on the education, be patient, and eventually we'll get a much broader spreading of this technology across the society, and we'll have a much more fair and transparent society.
Fantastic. Well, I love it, and exciting projects for sure, and I love that approach. So, so folks, there you have it, the Bitcoin Online Summit with Gregory Simon, and please follow him and look at his projects, and we're excited to hear more about as that progresses. So hopefully we can touch base with you again in maybe 6 months or so, and you can give us a progress report or an update on how it's doing. So. So that's it, folks. Thanks for joining us. Join us back here in a couple hours for our next session, and you'll also be able to catch the replay of this later on in your members area. So please do come back and watch it again and take notes. So thanks again, everybody, and thanks again, Greg.
Thank you, Stephen.
Fantastic.